Hey everyone, it's Wednesday afternoon and we are with Matt, the mortgage guy. How you doing, buddy?
I'm doing great.
Hey, one of the things I'm doing this week with all my experts is we're talking about surprises, right? Things that can come out of left field to kind of change up our thoughts about 2021. So as the mortgage broker in our expert series, I really want to have two topics. This first one is going to be what happens if mortgage, right, the process of getting mortgage or the criteria or whatever tightens, right? What if banks really uh, you know, ratchet the criteria or whatever. So you have a feel for what would happen if it went that way?
Well, it's funny because what my answer would be doesn't necessarily align with what I've seen over the last 12 months because your thought would be if things tighten, demand lessens,
Yeah.
and it kind of quells, the frenzy in real estate. But if you look at all of 2020 and me being able to look at 60 different wholesale lenders we send business to, things have tightened, and things have tightened dramatically for self-employed borrowers.
Mm.
It's tightened dramatically for people who are trying to get non-QM loans, which aren't, traditional loans. Are based on debt service or they're based on bank statements. And, they're certainly not the 2006 type loans, but they're alternative financing type stuff.
Hmm.
That stuff, jumbo. I jokingly tell people that lenders won't admit it because most lenders who are trying to get business would just say, "Oh, open for business, everybody come. You've been turned down elsewhere, you can qualify here." I don't like misleading people or getting people's hopes up or lying to people. If you're self-employed, it's harder. If you're trying to get a jumbo loan, it's harder. It's just the facts across the board. Every single lender, you've got banks that used to do huge jumbo loans. And I reached out to one of my investors recently and I was trying to do a cash out jumbo to 60% loan to value. That's not a huge risk. That's 60%.
Right.
And they said, "Matt, we're capping our cash outs at 325,000. Well, this guy was trying to get a $2 million loan, so that wasn't going to happen.
Wow.
And, there used to be plenty of 5% down, 10% down jumbo stuff. If you've got 780 credit and great income, 5% down isn't that risky. Lenders have tightened the screws, but it really hasn't hurt demand. So, as we talk about, it's interesting to think about like how tight would they have to tighten it for it to really affect demand? Because, it's not like it's impossible. If somebody's got a self-employed business and they show income and you know, everything's in line, they can get a loan. But, I would say 25% of self-employed borrowers that could get a loan in 2019 with that same type of, well, they've been affected by the corona pandemic. So I guess that was the big variable, but you know,
Yeah.
it, it hasn't softened this humongous surge of demand that
So
causes
let's
20.
talk about that a little bit because I think that's very interesting. And you're right, right? Sometimes you think something happens and market goes the opposite way. I kind of think of it as a balloon, right? A balloon animal where you squeeze one part and the other part opens. And again, I don't know the answer to this question. So all the hard, it's hard to get QM, jumbos, self-employed. Is that, are you seeing just a disproportionate amount of first-time FH? It basically is FHA made up the volume, right? Because again, you're a broker, right? So you say yes.
Right. Yeah. Or just conventional loans for W-2 borrowers, because
Okay.
there's millions and millions of borrowers who have W-2 income. And I mean, I've seen lenders do silly stuff. Like they just change their guidelines where if you're self-employed, you got to have a 780 credit score or better. And, that's just one lender out of 60. It's not everybody. But I think lenders, if they had to admit it, or if you're sitting around, talking to them off the record, they
Mhm.
would say, yeah, we're trying to
Yeah, we don't
not
want that business.
right, because it's just harder to sell to Fannie and Freddie. The end buyers of all these mortgages are saying, here's your old box, your new box is a little bit smaller.
Right.
Like, okay, rather than risk it and have buybacks, let's just underwrite what we know, W-2 income, full-time folks that are easy to underwrite. And so,
So basically, what I hear you saying, and again, I might not be hearing it right. Basically, they're doing loans that they know the government will buy. So again, trying to stay on what happens on the hard side, I'm not saying this is going to happen. It probably never would. But what happened if the government appetite for mortgages was cut in half or went to zero? What would happen in
I
that case?
mean, yeah, that would like quell demand. It
'Cause
would,
then banks
things
would
would
have to
come to a
keep
screech.
everything. Banks would have to keep it on their books, right?
Yeah, I mean, I guess so. Yeah, I mean, if you didn't have somebody buying these, and you've got companies doing billions per month in mortgages, um, they would slow down. They'd have to. They can't hold
Yeah. So I guess what would
50,
happen
60.
is Wall Street would have to step in. So I guess this is what would happen, right? What happened before the Fed started buying all the paper? Wall Street bought it. Wall Street wanted higher rates. The Fed didn't like it. So they became the buyer. Thus, they're taking lower rates. I'm just trying to play all of this out. So if they
Yeah.
step back, Wall Street's the buyer. Wall Street then say, yeah, we're glad to buy it, but we're not going to buy it with a three handle or whatever. Right. We're going to want a 7% return. So I guess that would mean rates go up. I'm just trying to
Right.
play.
Yeah, they want a higher yield. They're not gonna take the same yields that the government subsidized Fannie Freddie are taking. So I follow you there, and I think that then rates go up, which is another thing that kind of puts brakes on demand. It's funny to think about. That's one side, right? If things get tight, what could happen? But like me and you talked about briefly, we've seen a tightening. I would be interested to see like what happens if all of a sudden, for whatever reason, there's an appetite, a bigger appetite, and more lenders say, hey, we want to jump into the non-QM market, or we want to do 5% down jumbo, or we want to expand how many self-employed borrowers we could reach. It would be bad in a time like this, because me and you know that like that throttling up and down of supply and demand is are the two most important levers.
Yeah.
And if we make it easier, which
Yeah.
increases demand, then we've got 15% price
Yeah.
appreciation or something ridiculous.
Well, you know what? We'll make that episode number 3. Let's get into what happens if things get easier. Thanks, buddy.
Okay, sure.